Hey guys, good morning, good morning. How is everyone doing? I hope all is well. This read is coming from financialservice.house.gov. So, committee Republicans blast Chair Gensler misrepresentation of non-existent digital asset trading platform registration process April 18, 2023. In advance of today's hearing, all Republicans on the House Financial Service Committee, led by Chairman Patrick McHenry, sent a letter to Securities and Exchange Commission (SEC) Chair Gary Gensler. Republicans are slamming the Commission's approach to digital asset regulation and attempts to force digital asset trading platforms to come in and register under the ill-fitting National Security Exchange framework. Republicans are urging Chair Gensler to work with Congress to develop clear, specific clarity. Come on here. There's no clear language, clear rules of the road for digital assets that foster innovation and protect investors. Guys, there's actually a live. The Aaron is live right now. Let's go over there and check it out.
With the other 5 agencies, we have to work with the bank regulators and the Federal Home Loan, FHFA, to do this. But I'm committed to get this done. We have to do it in coordination with the bank regulators.
When? Another 12 years?
No, you're absolutely right. I came into this job 2 years ago. There were 8 mandates from Congress that had not yet been done out of Dodd-Frank. We've completed a number of those, and I'm committed to complete this along with the 4 bank rate agencies and the 1 FHFA.
Sir, it has been publicly reported that Greg Becker, the disgraced CEO of Silicon Valley Bank, sold $3.5 million of Silicon stocks less than 2 weeks before the bank's collapse, raising questions about whether he ran afoul of insider trading laws. What actions has the SEC taken to investigate stock trading by bank executives leading up to the bank's collapse?
If I could step away from any one circumstance and say it's against the law to trade on material non-public information. That's whether you're at a company or whether you're in just a private citizen, that's against the law, and we take that very seriously.
So what action has the SEC taken under your leadership to address insider trading generally?
Well, over the course of the last 2 years, we've brought over 1,500 law enforcement actions, and we could get back to you and give you a list of those related to insider trading, but unfortunately more than one.
Mr. Gensler, the S-2155 legislation that passed in 2018 contained legislation I authored that extended the 1940 Investment Company Act to Puerto Rico and the other territories. The legislation provided a 3-year phase-in period for enforcement that could be extended for another 3 years at the discretion of the SEC chair. I recently met with several investors from Puerto Rico who informed me the SEC was not enforcing this statute. It has been almost 5 years since this became law. Is the SEC currently enforcing this statute, or has a second extension been granted?
I thank you for raising. I think it was an important amendment to bring this under the Investment Company Act, Puerto Rico fund companies. And if you're aware of anybody or want to tell us somebody that you think is not in compliance, that would be helpful to us. But we are enforcing all of the laws that are on the books of the SEC.
Well, we need to have a meeting, sir.
I look forward to that.
Thank you.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. Mr. Gensler, you started your conversation with this committee with "my views are my own."
Yes.
Why did you say that?
Because it's part of our law that I always say that my views are my own. They don't represent the staff or my fellow commissioners.
Do they represent the agency?
I'm here as the chair of the agency, but because I'm a member of a five-member commission, the commission speaks as that commission, and so that's standard language that we include in each of our speeches and our testimonies.
So you don't represent you cannot speak on behalf of the agency. Why are you here?
As chair of the agency to express the views as the chair of the agency.
Then why didn't you say I express the views as chairman as opposed to my own? I don't understand that. Those are personal. When you say my own, that's personal. Now you're contradicting that and saying as chairman.
Again, because it's written into our...
I think you ought to reevaluate that, because I think that's a complete cop-out. I think that's a cop-out that I think we hear, and that's why this committee is going to express its opinion to you today. Mr. Chairman, I'd ask unanimous consent for a letter that I've sent to Mr. Gensler to be entered.
Without objection.
Mr. Gensler, you were kind enough, and your staff was kind enough last year to engage me on an issue that I asked for. I asked for us to speak. I asked for us to try and get closer to understanding. You've spoken a couple times today about, in regards to the chairman, but perhaps issues about, well, these would not be appropriate in public forums to talk about. But almost every filing that companies make are public filings. They already are public. It already is known. And once again, I find you trying to hide behind things for either a lack of willingness to be candor about it, or you're trying to obfuscate your oath of office, which was well and faithfully. This committee is not happy with that attitude or performance. I was told by you, after we'd had numerous discussions with your staff about a company that had a capital formation issue with millions of dollars at risk at the last minute based upon their public filings, that you would not respond at all or even discuss the matter with the company to try and alleviate a problem for the average number of days that it would take your agency to respond. In other words, the agency had to respond. You were simply a placeholder. You have no real responsibility. You have your own views, not the views of the management of the organization responsible. So I would say to you today that there's a corollary. You talked about your father. I'm going to talk about my father. And my father, who served as a federal judge for 14 years, became director of the FBI for President Reagan. He recognized that the agency had a problem that probably emanated from the Department of Justice. I'm not going to blame the FBI. I'm not blaming the Department of Justice. I'm saying the circumstance was there, that they would not give credible information or deal with people who they were indicting and charging. And my father changed that and said, if you are, or if you have reputable counsel that stands at the behest of a court, that a court could punish them for incorrect or unlawful behavior, inappropriate or unethical behavior, if you had a counsel who was of extreme confidence, then the Bureau would deal with you even on the most sensitive issues. I will tell you that one of the clients that I referred to you has extremely important and valuable confidence in their counsel. And you as an agency have chosen to stonewall, obfuscate, and not do your job. And I've sent you a letter, and I'm asking you to respond back to this committee and to me about whether you're going to look at that when confronted by this committee, because I strenuously believe that you should have some authority and responsibility in that effort. Mr. Chairman, I yield back my time.
The gentleman from California, Mr. Sherman, is now recognized for 5 minutes.
Mr. Chairman, Chair Gensler, I am very pleased with your attitude and your performance, but my views are my own. I'd like to speak for the gentleman from Texas, but he hasn't authorized me to do so. I won't. The chair of the committee says that we ought to have absolute clarity in this issue, and I agree with him. And we can achieve that if the chair will work with me on legislation to say that all intangible investment assets, including all crypto, are securities. That way it would be very clear that investors in crypto get the same protection as investors in stock, bonds, and other intangible assets acquired for an investment purpose. The definition of accredited investor that we have now relates to the wealth of the investor or their income, which may have nothing to do with their sophistication and knowledge. And I look forward to working with others on this committee to have a definition of accredited that discards the idea of wealth and looks instead at knowledge, but also specifies that if you're going to participate in that kind of private placement, you don't put more than 5 or 10% of your assets in any one basket. The definition of an accredited investor we have now is based on wealth levels set in the 1980s, which means they're completely out of date and probably shouldn't be used at all. Mr. Chairman, you said to the banking committee back a couple years ago, to the extent there are securities on these trading platforms, under our laws, they have to register with the commission. So assuming that a particular crypto token is a security, if that's true, is an exchange where that security is traded a securities exchange?
Under the laws, if you meet the definition of an exchange and you have securities on that exchange, yes, you have to come in and comply and register and protect the investing public.
Well, I heard you earlier say that no field in finance is so rampant with non-compliance. If there are those who are not complying with our securities laws, please shut them down as quickly as you possibly can. And I point out that the most famous crypto exchange was FTX. It is now, of course, the most infamous exchange. Congress expanded from 500 all the way up to 2,000 the number of entities that can be beneficial owners and still have the company thought of as a private company. I mean, that's a lot, 2,000 owners. But we've got a huge loophole here where you could have dozens or hundreds of beneficial ownership entities counted as only one if they list the stock in street name. Do you have the authority, and will you move toward a definition of 2,000 that reflects 2,000?
I think you raise a good point, and I've asked staff for recommendations for the commission's consideration, really to ensure that Congress's will about these numbers, the 2,000 number you reference in the Jobs Act, it really means 2,000, and how to look at, as you say, street name ownership that a broker might hold for hundreds of thousands.
I think you'll find companies calling themselves private that have many, many thousands of beneficial owners, and that's not what the securities law calls for. Companies, when they file their 10Ks every year, they list their risk factors. One risk factor that's increasingly important is the risk of a disruption in the U.S.-China relationship or economic relationship. If investors got explicit information about that, that would protect investors. If companies had to fight for capital by demonstrating their resiliency, their ability to withstand such a breakdown, then our entire country would be more resilient and Taiwan would be more secure. Can you move forward to be more explicit and clear with companies that they need to disclose the risks to the company and hopefully what they're doing to ameliorate that risk of a possible breakdown in the U.S.-China relationship?
Under current rules, companies need to disclose material risk. And if they have operations and there's material risk related to any geopolitical area, not just the one you mentioned, they're obliged to disclose that.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman. And, Mr. Chairman, it's good to see you again.
It's good to see you. I can call you Mr. Chair as well.
Absolutely. And as I always like to remind my friends here, we spent a great deal of quality time together at your previous posting at the CFTC when I was chairman of the committee. That said, I'd like to begin by focusing on a proposed rule pertaining to security-based swaps. There's a consensus from market participants that the SEC's proposed rule to publicly disseminate large security-based swap positions would deeply harm liquidity, particularly in the credit market. And I'll note, standing up a large position reporting regime for confidential regulatory purposes is sensible. As you know, for example, CFTC has a large position reporting regime for futures, but that information is anonymous and aggregated. In November, I and my Democrat colleagues and Republican colleagues sent a letter from the members of the committee regarding this proposal. We specifically asked that you support an approach that would require confidential reporting, noting the potential harm of putting sensitive position information out on the market. Chairman Gensler, have you carefully considered this bipartisan feedback, and will the SEC amend the proposal to reflect this?
I recall your thoughtful letter and the approach, and we're taking that into consideration. I think the part of the motivation, as I understood it, that Congress put this in the act that you helped write was not only for the official sector to have some information, the confidential information, but also then some of that information to be also in the public domain. And that's what we're sorting through, but your letter is helpful.
I look forward to your response because I think the issues that have been raised are very legitimate. As chairman, as the chairman also discussed, the volume and breadth of SEC rulemaking is of significant concern to me. The implication of many of the proposed rules are massive and often affect the same or interconnected financial products and market sectors. The adverse consequences in one sector can bleed over into another, causing lasting economic harm. I'd like to reflect on my time as chairman of the Ag Committee during the implementation process of Title VII of Dodd-Frank. The CFTC's rulemaking process seemed to be rushed and chaotic, which led to proposed rules that were poorly vetted. As a result, the CFTC routinely resorted to last-minute staff guidance and no action letters that were needed to modify new rules that simply weren't always workable. This patchwork approach circumvented the standard rulemaking process and lacked many real cost-benefit analysis. At this time, many of the proposed rules were required by Dodd-Frank. They were at that time. The same cannot be said today. Even still, the SEC is following the same path, some would say flawed path. The proposed rules have a major impact on every asset class under the SEC's jurisdiction, with serious consequences for public companies, investors, retirees. I recommend the SEC take great care to analyze and carefully consider the impact of draft rules. This way you can avoid the rush to fix all of the unintended problems that were created. Thought to consider, Mr. Chairman, as we work through this process together.
Yeah, I agree. I think the input from the public, we put these proposals together carefully, but we so benefit from the public comment. We benefit from hearings like this as well, and the letters that you send us to sort through. It generally takes over a year before we finalize something, and we take these meetings with market participants seriously and consider their thoughts.
I would just note, Mr. Chairman, you've issued twice as many rule proposals in your first 2 years as the SEC chairman, 53, as chairmans Mary Jo White, 23, did, or Jay Clayton, 26, in their first 2 years, while providing 21% less time for public comments. I get the impression from personnel across the SEC that there are concerns about the high volume and the fast pace of this rulemaking. Let's try and get it right, not get it done in a hurry. With that, I yield back, Mr. Chairman.
The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you for your good work, Chairman Gensler. I appreciate the energy and the talents that you've put to work on behalf of investors. My friends on the other side of the aisle seem to be bemoaning a lack of regulatory clarity, and then in the same breath, they criticize the SEC's rulemaking efforts, which arguably would provide that clarity that they desire. Chair Gensler, in your testimony today, you mentioned that there have been over 130 enforcement actions brought by the SEC against crypto firms that have either engaged in marketing securities without providing the necessary disclosures or failed to submit audited financials or investor protections that would allow investors to actually make a meaningful and informed decision regarding the crypto products or the underlying business. Chair Gensler, based on current law, of those 130 cases, those 130 enforcement actions, how many have you won? How many has the SEC prevailed on?
Many of them are settlements, but those that we've taken to court, we've won on the Howey analyses, these token issues, 6 or 8 times. We've won on other matters in front of the courts as well. So we've been quite successful throughout.
Okay. Am I correct in asserting that in each of those cases went through a regulatory or legal process and or maybe even judicial appeal, and that actually there are decisions, written decisions on each of those cases, either by an administrator or by a court of law that do provide explicit guidance based on current law to other crypto and stable coin firms to provide clarity and that actually lay out some rules of the road that should, you would think, guide other crypto firms in their action?
You raise a very good point. Every one of them is a vote of a 5-member commission, sometimes run by Jay Clayton, sometimes I'm honored to chair, but always a 5-member commission and always with a written public document, an order, or a charging document.
And there's also a joint statement on crypto asset risks to the banking organizations. That's January 3rd, 2023, which lists 8 key risks associated with crypto assets that banks should be aware of. So there's a fair amount of guidance out there and clarity. It's just not the clarity that the crypto industry wants.
Absolutely. We've also been clear and we've been public as a 5-member commission as with regard to the custody of crypto assets, about the exchange definition in crypto assets. We put some of this also out to public comment, but I agree with you. It's not a matter of lack of clarity. I think this is a field that in the main is built up around non-compliance, and that's their business model. And they have chosen, even though it's not the law, they've chosen to be non-compliant and not provide investors with confidence, protections, and it undermines the $100 trillion capital markets. If there's one field of finance and investors get hurt, then it's going to undermine those small businesses and everybody else raising money in the capital markets can get hurt by this field of non-compliance.
That's great. One of the things I worry about in this area is that crypto firms offer an amalgam of services that in the traditional banking system and securities area are ring-fenced. So they do a lot of things like they have exchange function, broker-dealer functions, custodial and clearing functions, and lending functions. And we've seen commingling of investor funds. Can you talk about the risks that arise from that structure?
We separate these everywhere else. The New York Stock Exchange is not running a hedge fund trading against the people trading on that New York Stock Exchange. And here we have a field that commingles this. and trades against their customers and doesn't give the proper disclosures. And we've brought a number of cases, one settled, one a litigated matter with this regard.
Thank you. Mr. Chairman, I yield back.
The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you very much, Mr. Chairman. Speaking of crypto, commingling of funds, while we're on that subject, prior to the collapse of FTX, did you have any concerns with the company or question if they were breaking any securities laws or harming investors?
I think, if I might, I have had, since I've been in this job, a general concern about the field, and as expressed here today, about the non-compliance of this commingling of these various functions, and that they should come into compliance by separating exchange from broker-dealer, from what you might call a hedge fund function and other functions.
So with those concerns, did you direct your staff to look into FTX?
I want to stay at a little bit higher level, but I directed the staff to look into the crypto intermediaries and a wide range of crypto intermediaries. Yes, sir.
Okay, so what did they find?
Well, we filed an action late last year, a number of actions, which are public actions with regard to Sam Bankman-Fried and FTX that are on our website. But what we found in those actions, as they show, is we allege a number of violations of the securities laws.
Yeah, when did you think FTX was problematic? At what point?
Well, again, we filed these actions in December, and I think we filed follow-up actions in January because it takes time to develop an investigative file, and we follow the facts and the law where they come. But I've given speeches, and I've been clear with many members of this industry that right now they need to come into compliance. We have one goal, is to bring them into compliance and to stop commingling all these functions, stop using customer funds as if they're their own. It's like somebody who's got their hand in the cash register because they say, I want to take some money out of the cash